unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to Insider Exchange. Welcome to a new week. Hopefully it is a productive week. We'll see what happens by Wednesday because it is that week, folks. Budget 3.0. Yes, the third time might just be the charm. We're going to try and avoid looking at that because we don't know. Maybe there'll be a fourth budget and then we have to look at that. So we're going to wait it out for this time around. We're going to let the third budget happen on Wednesday. Then we'll come back to it next week and see what we make of that third budget and what announcements are coming through later in the week. But what we are going to be taking a look at in Market Matters is we're going to be taking a look at the first ratings downgrade, or the last ratings downgrade, technically speaking, but the first time by by Moodys of the United States. The first time in history that Moodys has downgraded the United States from a AAA to, I think it's A plus or double A plus.
Double A plus.
Right, we're going to look at that.
Double A1.
Double A1.
Because Moodys.
Because it's Moodys. We're going to look at the implications of that. We're going to look at what that means for the United States and this historic moment and what it means for the rest of the world. We're also going to look at the Rand. Decided to flirt with 17 Rand 99 or sub 18 Rand levels last week, is back at 18 Rand and 1 cent this morning. We're going to take a look at that and see what we make of it. And then we're going to take a look at some other economic data coming out later this week in the form of interest rates out of China, CPI data out of South Africa, and CPI data out of Europe if we have time. So, let's start with the historic downgrade of the United States. This is something that S&P and Fitch did many, many years ago.
S&P did it in August of 2011, and there was huge panic.
So 14 odd years ago, almost.
13 and a half years. And at the time, our market was down some 2,000 points on the Monday. Because to their credit, they always do it after market close on Friday so that everyone gets a moment to reflect. And US futures, which is dodgy because it's 5 o'clock in the morning in the US. S&P down 1 1/3, NASDAQ 1 3/4, Dow less than 1, all in the red. So Moody's did it, but when Standard & Poor's rather did it, it was wild. It was a freak out. It was absolutely like, whoa, hang on, this is the end of the world. By the time Fitch came along in 23 to do it, 2 years ago, it was like, where Yerk's been for the last 12 years. And now Moody's is always late. I mean, they were the last to put us into junk status as well, etc. I think it's symbolic. I mean, what they state is rising debt and deficits is the main reason. Debt to GDP ratios rising to levels significantly higher than similarly rated sovereigns, i.e., guys, you're almost a banana republic at these levels. I think it's symbolic, but US isn't defaulting on their debt, although there has been the idea of a Mar-a-Lago Accord floated, which would in part effectively be a default, just change term durations and stuff. I think it's important. America has a problem. They've got a 30 trillion debt burden. Their interest payment is up about 3 or 4-fold in the last 4 years or so. Their interest payment is now more every year than they spend on defense, which is by a long way their biggest spending item. And there's really good old-fashioned only 2 ways to get out of this: spend less or tax more. And
we know they're not interested in doing either, especially spend less, because if I remember correctly, they've just increased their defense budget. And I think it might be for the first time in a long time, it's now going back above $1 trillion to be spent on defense. Kind of makes sense when you are waging war against everybody in the world. But I want to look at you said it's symbolic, and I want to look at the symbolism in the context of, at the same time, over the same weekend. Now, this is completely unrelated, folks, but you may as well mention it if it's good. S&P coming out and revising South Africa's rating to the upside. This is one of those events, and we spoke about this on a couple of shows ago, saying black swan events that happen once in a lifetime. This is probably one of those once in a lifetime events.
S&P didn't change us. They left us at positive, and everyone thought they would change us to neutral. Or have I
Yes,
got
but
that wrong?
the long-term foreign policy debt ratings has gone from BB
yes.
minus to BB. So that's a notch above. We're still in junk status. Let's be clear. That hasn't changed. But it is slightly more optimistic and slightly more positive at the same time as it is slightly more negative in the United States. I never thought I'd be alive to see that day happen. But again, let's be clear, we are nowhere near being out of the woods.
Yeah, and I mean, for us, it does matter because we need to get out of sub-investment grade. And we're a long way from that, but we desperately need to get out of it. And we are moving in the right direction. I think all the rating agencies have us on positive outlook, etc. Truth is, we're not defaulting on our debt either. Where this hurts you, and where it's been hurting us for the last many years since we became sub-investment grade, otherwise affectionately known as junk, is the rate on your bonds. It blows your rates out. Although, interestingly, Brazil went junk before us, and their bonds were always cheaper than ours. They're 10 years and stuff, and I could just never wrap my head around it. But we're seeing it in the US 10-year, 4.544. So, fun fact, when it hit 4.5 on the 8th of April this year, Trump blinked and cancelled Liberation Day. But he can't. Well, I mean, what can he cancel this time? He's run out of.
No.
He's got no cards.
No, don't say
Him
that.
and Zelensky.
Don't say that. Some of the cards that he's been playing, we didn't know he had in the first place. He can always find new cards.
He can find new cards.
Don't put that out there into the
world. I mean,
world.
so fun fact. So Brazil 10-year. Whoa, okay, that's changed. Brazil 10 years at 14. That's well above us. Okay, because forever and a day, the Brazilian 10-year was cheaper than ours, and it has. Oh, looky, we're looking more pretty. Anyway, the key thing is that it matters because it's saying to the world, in a sense, that the days of America being the economic superpower are eroding. They're not over. And maybe it's not even. Maybe it's only the end of the beginning or the whatever.
Beginning of the end or something of the sort.
Like that. It's not over, but it is not unimportant, and it is the stark reality. And I mean, I was chatting with Nikunza this morning about it, and the short answer is no one's surprised. I mean, no one's out there saying, what's Moodys doing? When S&P did it, there was surprise, there was panic, there were, I remember brokers sending out emails over the weekend on how they were going to manage the next morning, and it wasn't actually as ugly as many had thought, myself included. But it is, it's a shot across the bow.
But I think it's also not that ugly because at the end of the day, the dollar is still the reserve trade currency in the world. And so therefore, that is kind of balancing it out. I mean, you still have a demand for dollars that is being created. And I guess that's probably why America wants to maintain that defensive position, because the moment you see a decline in the demand for dollar coupled with this, it means then that obviously the ratings on government bonds in America is going to be affected. So as long as you've still got demand for the currency or demand for the treasuries or whatever, you're still kind of in good stead. But nobody can deny that the $34+ trillion of US debt is a lot.
And I mean, the dollar last Monday, dollar index was 102. This morning, it's 100.3. That's a big move in just a week.
And the rand. I want to look at the rand because the rand started off the month. We're almost done with the month. We're about 2/3 of the way into the month. And the rand at some point was at 18.50. It has touched 17.99 last week. It is back at 18.01, 18.02-ish as I look at it now. The rand absolutely benefiting from, one, the S&P announcement, but two, from the fact that global markets are saying, hang on, maybe the dollar isn't.
Yeah. And on Liberation Day, or was it Liberation Day, or was it the capitulation? On capitulation day, the rand was almost 20. It was 1980 and in fact 1990 and some change. So the rand's moved 10% in 6 weeks, which again is insane moves. So we can see two things from the market. People are selling US debt. That's why the yield is up at 4.544, and they're taking the money out of the US and going somewhere else. At the moment, they're coming into the ZAR. Now, truthfully, the ZAR started moving last week on news, I think, from Deputy Finance Minister that we were going to be doing a review of our inflation targeting process, which truthfully scares me, because what they're going to do is they're going to move inflation and say, new target is, I don't know, 2%, and inflation's currently 2.7, so we're going to rise rates. I should have said that more quietly.
Yeah.
Okay. Shouldn't give anyone ideas. But it is.
And we have our rates meeting next week, Si. We have a rates meeting on the 29th.
There's a lot happening.
There's a lot happening.
Budget
this week,
pauses at the
rates
White
next
House.
week. Oh, There's a lot.
I hope Ramaphosa took lots of decks of cards.
I don't know. I don't know if they're a card playing kind of. I found it interesting that he's decided to travel with certain ministers, and I looked at the ministers, and there was one in particular that I was just like, why? Just why? But that's
and his token white. Steenhuisen.
agriculture minister.
Oh, maybe he's there for agri.
Yeah,
I thought it was the token white.
No, no, he's there for agri.
Actually, hang on, that fits, right? Because the farmers that ran away were being persecuted, and now the Minister of Farming, who weirdly is white, is going to say, no, they're not. It's going to be such a messy meeting. Yo, I'm going to go to bed early that day.
Well, to be fair, it can't really. I mean, it's interesting that the meeting happens to coincide with the week that we are having our third budget speech. I don't know if people.
We've got inflation on Tuesday.
Yes, inflation on Tuesday.
Is it Tuesday? It's Tuesday.
Budget speech on Wednesday. Rates the following Thursday. Let's look at inflation while we have time for that. Inflation print from Eurozone coming out as well. Our own inflation print coming out. But before that, we've got Chinese interest rates that will be coming out in the early hours of the mornings. We know that China's kind of been trying to stimulate their economy, but not really trying, but also trying. And are we expecting a major announcement from a rates perspective?
I think not. A couple of things. So we had some data out from China this morning, which is Monday 19. Retail sales year on year down a little, but not bad. Housing price index down 4%, but previous was 4.5%. These are year on year numbers. Unemployment 5.1, which is fine. Industrial production up 6.1, better than expected. Fixed asset investment 4%, slightly down. But I think the data coming out of China is good enough. And I think the fact that we have some trade peace in our time, and to be clear, 30%, which is the one trade side for Chinese goods into America, still is about the highest number since Smoot-Hawley 100 years ago. I think the Chinese government can hold steady for now. They've been doing a big push on the consumption side. Remember the cash for clunkers that Obama did post-grad financial crisis? They've been doing like cash for toasters and stuff. No, literally, take your own toaster and upgrade to. They're trying to get consumption going.
Yes,
and part of what they do there is Chinese people save because they don't have health insurance, they don't have pension schemes, and they're bringing those into the process and saying, et cetera, so that people will save less and spend more and try and get consumption going.
There is a really big culture of saving in China. That's something perhaps we should look at in one of the deep dives, is how they kind of maintain that ecosystem. It's something that we've also heard some Chinese officials come out and say as well. When we had the trade war conversations, there were a couple of individuals and business people from the Chinese side of things that said, we're not too bothered by being tariffed because from our side, we've been saving. When we start spending money, we are spending money that we have saved. We're not spending debt.
And it's weird because Japan also has a massively high savings rate. Japan, because of the deflation, which was, well, if you wait a year, it will be cheaper.
Yeah.
So people waited because they have good healthcare and old age and everything else. China is the opposite. They've got inflation. Their freak out is worrying about what do they do in retirement? What happens if they get sick? Things like Ping An, which is discovery held, or 25% discovery held, is to try and bring that in, the concept of medical insurance and the like to China. But other data, as you say, when we've got our own CPI, what were we last time? 2.7.
Yes.
And even core was 3.1.
So I want to take that 2.7 print and say, even if we come in this week and we come in at 2.9, maybe 3, that's the lower end of the 3 to 6% band.
And to be clear, the governor says 4.5.
Until the governor suddenly says we can do 3. Or the governor suddenly says we should look at 2.5 as an anchoring point.
So the story is that you want to change your inflation targeting, and I'm assuming you always want to change it lower. No one wants to change it higher.
No one wants to change it higher, yeah.
You always want to change your inflation targeting when two environments are in existence. One, that you are in a rate-reducing cycle, and that you are in an inflation-reducing cycle. Ting, ting.
Tick, tick.
I think this is a debate, and I said it years ago, this is a debate we should have been having a while ago, so that we could almost put measures at a parliamentary level, because this is going to have to go through parliament, that we could almost put triggers in that would say, here's the law, when these two things happen, All three things.
Confluencing factors, then therefore this.
And
this
maybe
triggers.
it's step.
Yes.
Maybe we go from 3 to 6 to 3.
Yes.
And then to, or maybe, and then to 2.5.
Yeah, let's not shock the market.
Let's do it gradual. But if we're in exactly the right place to change interest rates, although, inflation
targeting, yeah.
Our rates are still far too high.
Yeah.
But we're at the right space to do it. But that process is going to take a bit of time.
And should we do it, I think the other thing that we need to think about as well is it's all good and well to want to do that. From a governor point of view, that is part of his mandate, is inflation targeting alongside currency protection, right? And he would be achieving that because the moment you start to say we're anchoring inflation at a lower rate, thereby saying that we've got more control over inflation in our own economy, the rand's going to strengthen.
Yeah.
The rand's going to absolutely receive that positively.
If tomorrow the president, who's currently in fact, by now he's in America, poor Oak, like he's leaving at like 11:30 last night, and he's like having to have conversations with random, like I could not be president. Apart from that the pay is probably crap, like what, 2.5 a year. I mean, nice money, don't get me wrong,
Yeah.
but like you work for your money.
So Jimbo in our community is asking, if we then if we reduce inflation targeting, does that mean rates go higher for longer?
Well, not necessarily.
Yeah, I was going to say.
So to your point, if we woke up tomorrow and the new inflation target is 3%, firstly, we're below it. Secondly, Rand is going to strengthen. And theoretically, maybe not, but in theory, Rand's going to strengthen. Market's going to rally. I mean, the Rand strengthened just on the news. Excuse me, our bond yields are going to come down, etc., etc. So suddenly our 2.7 inflation is actually going to start heading to 2.5, maybe. So what they might do is they might pause rather than cut. But you know what I think they're going to do next week? I think they're going to pause anyway.
But and I think the other thing that we must look at from an inflation targeting point of view is the driving factors. There's demand side inflation, there's supply side inflation. And from a South African perspective, let's be clear, our inflation coming down to where it is not necessarily because all of the factors have been aligning in our favor. It's because our economy has been stagnating.
There's no demand.
There's no demand, right? So consumers are so stretched that they're saying we're not even spending on stuff because we don't have the money to spend on stuff. We're all focused on repaying debt. We're all focused on, and that's preventing demand side inflation. There is still supply side inflation in place. We're importing crude. We're a net importer of oil. So the fuel side of things always going to be there. And that's why they strip it out of things like core inflation. But our inflation number coming down to where it is because there's very little demand side in the
only
market.
inflation we have in this market is services, Eskom, water,
Yeah,
rates. Those
which
sort of
is
things.
also being imposed again because
Correct.
the service, the increasing rates from Eskom are imposed by NERSA and applied for by Eskom. It's not voluntary. There's no consumer out there that voluntarily goes to Eskom and says, I want to pay a higher tariff. No, it's being imposed.
And the SARB's worry is a sudden collapse in the rand, which then absolutely hits us because oil goes through higher, and all our imports go higher, and that's what the SARB is worried about. And I appreciate our rand was 1990 just on capitulation day, but like
But we survived.
18. We survived.
survived.
I mean, our SARB is overly hawkish.
I think that from our perspective, the other thing that needs to be looked at is if we are to adjust inflation targeting, whilst the minister or whilst the governor will say this is a fantastic thing, this is a great time to do it for South Africa, he'll make a case for it, it'll go through parliament and all of that. The one critical thing that parliament fails to understand is the other side of that coin means we need jobs. We need an economy that grows. You can't have an economy that goes into recession because when you adjust inflation targeting and things down in a recessionary environment, the market's already down. You're not really doing anyone a favor at that point. You need economic growth. That's still what we need at the end of the day.
Yeah.
It doesn't change. It doesn't suddenly be like,
more than
now
anything,
we don't need,
more than anything, we need economic growth.
Jimbo asks, do we think that the Ramaphosa-Trump meeting will influence the Reserve Bank governor's decision?
Nah. No, I Reserve Bank, I don't even think they have TV. They're certainly, although no, the governor, it was the previous governor who followed me on Twitter. Actually, I think SARB, no, it's Stats who follows me. Anyway, that was my claim to fame, that Mr. Mboweni followed me on Twitter and DM'd me once or twice.
Oh, nice.
Or maybe replied to off track. No, I don't. Because SARB is always, we are data dependent. And then everyone's like, yeah, but guys, look at the data that you are ignoring. Then they're like, we forward data dependent. We're looking at forward data, and we're like, yo, talk about a shifting of the goalposts. But be it as it may, that meeting on Wednesday, even if it goes, I mean, let's say it goes incredibly poorly and it's a Zelensky type thing.
What is the worst case scenario?
In the immediate, our rand will weaken. In the immediate, our bonds will get blown out. But you know what's going to happen? We're going to end up with some tariffs, which are nasty. But you know what? We're going to end up with tariffs anyway. Trump's going to say he's not coming to G20. I've been saying since January, Trump is not coming to G20 in November. There will be a short-term nasty, but in time, it'll just shake out.
Yeah, I'm looking at the mechanics behind it and all of that. I mean, we already know that Trump is going to take a rather aggressive and abrasive stance, as he did with Vladimir Zelensky, as he does with leaders that he believes are doing the wrong things. And we know that from a publicity point of view, he's going to go on and say, very bad things are happening in South Africa, terrible things are happening in South Africa, as he said in the past. And even as he has said that, the South African economy, the JSE continues to trade at all-time highs. The rand continues to find its strength. Markets continue to say, we see your viewpoint, but we don't necessarily agree with it. So worst case scenario, we go through President Ramaphosa and President Trump don't see eye to eye. They don't reach a conclusion. It ends in an ugly manner. We all know President Ramaphosa is not going to say something out of turn. He'll come back. He'll come to South Africa. He'll say, we went to engage. We're still open to engagement. That's the kind of president he is. He's not going to respond in a knee-jerk.
He's not going to punch him.
That's it. Well,
hey,
I don't know if you're that close. If you're that close, hey, if you're sitting that close to him.
But it's also, so we're not expecting anything good from it. Anything good that comes out of that meeting is a bonus, and our market will love it. So the expectations are not there. We know that there are bad things happening in South Africa. We live here. We also know that it's not white genocide. To be quite clear, white man here, not being genocided. We also know that the rest of the world looks at Trump and thinks, yeah, look, dude, liar, liar, face on fire.
Face on that could be from a bad tan as well. But I think what you said is quite important, Sai, is we're going into this week, whether it's from a budget perspective, whether it's from a Trump perspective, with little to none or little to no expectations. And that's a strength that South Africans have always had. We've always been resilient and been able to take a lot of drama that comes our way, and it's put us in a position where we don't have expectations, and whatever comes of it, we'll deal with it then. That might be a very one of the few times that it works in our favor, I want to say.
Yeah.
Well, we'll see how it works out. We'll see how...
Before you go.
Yeah.
Sasol, 71.38.
Oh, yeah.
Good daily chart, good weekly chart, Capital Markets Day tomorrow.
Oh, see, and Sasol's quite interesting because we've been keeping an eye on this for the longest time. We came down as low as 55 Rand at some point. At some point, the share price, I think it was last year, maybe even the year before that, was north of 300 Rand. Pre-pandemic, we were at 600 Rand. So to be at 70 Rand, we are celebrating the little things in life because sometimes you need that. You need a bit of positivity to start off your week. We hope you have a great week, folks. The rest of the show, as always, will be out later in the week. In our deep dive, we take a look at the gambling industry in South Africa, and in our investor insights, we look forward to the Finance Magnates Africa Summit. You want to tune in for those, you want to find out what we're discussing there, but that's Market Matters, and that's where we're leaving it on this